All right, happy Monday, everybody. You're here at precisealgorithmtrading.com. It's Monday, April 22nd, 2024, and we had a big bullish day today in the markets, and we'll see what we think about that. Um, our automated trading systems today, this is the Dow, had a nice recovery. We're not back yet, but that's a good move for today. Two trades, I'll take it. Taking back a lot of what we gave back the last few days. The Russell is really just on a it's on a series of stop outs, which is sort of fine. Some of the statistics that you get on these things, this is one, two, three, four, five, six, seven stop outs in a row, and um, one of the stats that you get is how many losers in a row versus how many winners. And these stop outs are kind of fine because what you're really looking for is these types of winners. So you get enough losers in a row and they're all small, then you can get some big winners eventually. And I know that sounds, I don't know, like why would you want to do that to yourself? The reason is because you want this kind of a eventual gain. This is just basically a few months worth of going sideways. So that is the way the markets work. And the Nasdaq brought back a little bit today, even though this has been pretty wonky as well. But we had one bullish trade today, so one good winner. Shouldn't call it bullish because well, it was, but it was it could have been either bullish or bearish, and that's the way the automated trading systems work. They go both directions. All right, let's look at the regular markets. Now, I did something over the weekend for the people that are actually paying attention. There are two moving averages on here. And in the past, I've been trying to keep that so it's simple with one moving average. Well, I decided to put the weighted and the simple moving average together because they both work. And what I figured out is that when they're actually both going in the same direction and they're both green, then they really both work. So when they're both red, they both really work to the downside. And when they're going from green to red, then they typically will have this gray area because one of them will be red while the other one's green and vice versa. And that's what a gray bar means. So if they're both not red or they're both not green, then they're going to be gray. That's what my new. I mean, it's really not that much different than what we've been doing, but the simple and the weighted moving averages work well together, and I really did put them together. So they're in my opinion, very complete this way. You can trade off of them. And are they perfect? Certainly not. Nothing is, but you almost can't show me a more. I mean, from a level of like what works, this plays out really nicely, and it plays out on any stock and any tradable instrument from what I can tell so far. And again, they're not perfect. So let's look at the S&P today. Went up 43 points, 0.87%. The Dow went up 253 points. The Russell, we got to look at the IWM. Went up 1.12%. The Nasdaq went up 169 points, or 1.11%. Now let's realize these are all just giving back or coming back up after such big moves down. So, um, and the transports were up 140 points, or 0.93%. Now, none of the market structure or anything else I've talked about goes away. All that works with this too. And you can see, actually, this is a good example where we've pulled back so hard and pulled back up that over here on the hourly chart, one of the moving averages, and I don't really care which one, has turned green while the other one's red. And we've come up above it, and we're working with gray bars. And at one point there, it was a green bar. So really, the next move is for this thing to go probably all green for a bit and then roll over. And that's a tradable move if you want to play it. And that's literally when you get some, you know, where the market moves too far too fast, you can play it back to the mean, and this is a way to do it. So you're going against the trend on the daily chart, but at this point you're going with the trend on the hourly chart because it's you got break of structures, you've got starting to go to higher highs and higher lows. Your polarity is switched, but that is against the higher time frame, and all you got to do is know that and don't get crazy with it. So that's how you play against, like, when the market goes too far too down, then a bunch of people get on board for it to get bearish, and then all of a sudden the market rips back up to take those people basically, behind the tool shed. And that's what we're trying to do, is get on the side of the market. All right. So a nice bounce, and in my opinion, let's look at all these real quick. Let's go to the ES. So the ES, we're not quite where we got one little green spot over here on the hourly, and now it's gone back to red. Now, can it, you know, I still think that we're going to be in for some back and forth with a more bullish than bearish move here on the hourly. And that's, just because I think so doesn't mean it has to. Um, if you look here on the daily, we got a wick on the price on 419. If we look here, if you go back in time on reversals, you typically get these wicks. Now, this one had a wick and then came back up to the middle of this. Look at these white lines. They're gray, but look, these right between, that's about the mean. Pulls back to the mean before it went back down again. Well, we got a wick here. We can pull back to the mean between the two white lines and then pull back down again, would be my expectation of where we're going with this thing. So if you look over here on either one of these charts, it's projecting my crosshairs, and you get up here close to where the magenta dots are on the daily, and you're also really close to this cloud line. So reversing up in that neck of the woods makes a ton of sense, even though we're on the other side of the two average true ranges on the Keltner channels. So let's look at another instrument. So we went too far. We got a nice big tail on that hammer candlestick, and we've come back in. The question is where do we come up back to the mean? We're green on the hourly chart, so really you can just keep going until the green turns into gray again, or red, and that would be your signal to get out if you're long the Russell. The Dow here, it had a nice big candle, hammer candlestick. We're back up into this zone. We're green on the hourly, bouncing up against this cloud line. And you can see if this thing turns to gray again, or red, it's time for this thing to roll back over again on the daily chart. And you can see when this stuff happens like it did back here, it takes a few cycles to the downside to play out. So we've got one down. We can expect to move up higher, and then a move down again for a next cycle down. I know that may not be music to everybody's ears, but the bullish percent indexes flipped over on the bigger bullish percent index of the NYA, and that's what we're in for a while. The NASDAQ, same kind of thing, although they're still red over here. So that'll be interesting. I think this thing's got some. That is not look. I mean, that doesn't look like finishing candles at all on the Nasdaq. However, the other markets I think will drag it with them. And all right, what did oil do? So oil is still green. Both moving averages are green. And both moving averages are red on the hourly time frame. Now, realizing if you're going to play these and you're going to try to use the parabolic SAR dots as a stop, well, you're going to need to use pivots instead, or come underneath the 2 ATR stop, or pick another way to draw a stop in. Don't do this without stops. I mean, that's I think well, the smartest thing to do is always have a stop in place to protect yourself from the market. So, anyways, oil's still looking like it's got legs. So let's look at the weekly chart because it's the same thing. The weekly moves, there's still two moving averages, and in this case, you can see a nice green move higher, and then we've got two gray bars lower, and this weekly bar is only a day old, so that one doesn't really matter yet. But these are playable as well on a weekly basis. Alright, I'm going to wrap this thing up pretty quick. Let's look at the VIX. The VIX came back in, and we finally got the big move back in. We still got to probably come back to the mean. That's not going to be without some thrashing around in these higher levels maybe. And so I think there's going to be further potential for the VIX to fall back to the mean, which will give the market a little bit more legs up before it rolls over, which was what we were just talking about. Gold fell down, gapped lower, turned red on the hourly chart. Everything went from green to red. So they don't have to turn gray first, but it's usually going to be with a pretty big move when it does something like that. And let's look at bonds. So bonds really are just doing what they've been doing for a few years. They were way back here. They were strong, great trades to the upside. And for the last few years, they've been doing nothing but being, I shouldn't say nothing but being great trades to the downside, because you get these moves that you can certainly play back up. But it's been a bear market for a while. And it doesn't look like it's ending now. Alright. Natural gas, it's looking like it's still pretty much a bear market. Alright, let's flip over to stockcharts.com. Point and figure charts, bullish percent indexes. By the way, this is where we got the heads up last week when this thing flipped back to a column of X's that we were starting to get near a bounce like the one that we got today. So the industrials didn't move today. The NYA went up 0.76%, still in a column of O's. The transports didn't move, still on a column of O's. The NASDAQ up 0.22%, still on a column of O's. The S&P up 1.24%, still in a column of O's. The S&P 100 didn't move today, so that's interesting. The NASDAQ didn't move today. NASDAQ 100, I should say. So, I think it's going to mess with us. Some of these index products, like the NASDAQ, is probably going to do some jostling around down here before it finds legs to get itself back up. But we are way outside this Keltner channel. And we've shown, I mean, the stochastic, by the way, is also rolling back up again. The question is going to be is, what kind of energy is it going to take for this thing to get back up and get itself back to a mean over here? But that's a playable move, like I said. Put in QQQ, getting back to 429 after it's been at 415 is, you know, what is that? I don't know, 3 or 4% anyway. So, and that's what I'm doing. So, trade with your own risk and use your own ideas, but I'm trying to give you some ideas to help figure out the path. So, until next time, take care, good trading, and have a great night.